Good morning, good afternoon, good evening, wherever you are. Happy trading. Welcome to my second video. In the first video 101, we looked at why and where we actually make mistakes and where we need to improve. This is the first step towards managing your mind. And if you follow what I have to say here, you can 100% guarantee that you will improve your trading by at least 70, 80, 90%. Welcome to the journey. Let's quickly talk about the risks. Investing is risky. Please evaluate your own risks before putting your hard-earned money. This presentation may include some analysis. Please don't go by that. Have your own analysis done. Financial success depends on various factors, internal and external. We do not take any responsibility for your financial success. We've already looked at the pyramid, and we said that we have got these four different layers. The basic limitations that we have by which we are driven, then we have our own beliefs and our own value systems, our perception of reality. What we see is a lot of times is not what it is, and then on top of it, our emotions at the time of taking decisions, which are actually making us to react rather than respond. Easiest and proven way to manage mind is to create rules and to follow them. This has been proven multiple times. You look at anything and everything, even you look at the commando training, even you look at the sports persons, they always have their basic rules. There is a specific way in which Federer stands before doing a serve. Basic rules that he follows puts his mind in the right frame of mind. These This slide and the next slide I borrowed from one of a great teacher, Avadut Sathe, and this has helped me tremendously. These are set of rules that I follow. I made some minor corrections or changes, I would rather say, and you are free to make your own changes to these, but have your set of rules, follow them rigorously. Every day you look at whether you are following them or not. Rather take printout of next two slides, keep it where you will continuously see it during your trading day. Every morning read these things aloud. Even today I do that. If you are doing that, your trading will improve by at minimum 70%, maybe more for some people. So let's quickly go through each of these points. I am the most disciplined trader ever. Discipline is the only thing that will make you sail through. I follow market price action and not my mind. Market is the king. I trade only high probability setups. It's all about probabilities. I always mind my entry. If you take a wrong entry, that is what will play on your mind and make you make mistakes. About 70% of your mistakes are result of bad entry. I analyze charts as if I have no position in them. So if I have a position or not position, I always look at the chart same. Otherwise, what happens most of the times is I have taken decision based on some hypothesis or some understanding of my reality or my limitations or whatever. And every individual has a style of proving himself right. So you will continuously keep proving yourself right, and then you'll make mistakes. I consistently follow my trading plans. We are going to be talking about some sample trading plans that will help you. I am accountable for my trading, very important. I am taking decisions, and it's only decisions which are in my control. I keep my trading diary with performance metrics. I'm going to be talking about how to do the journal entries in the trading diary. I'm always with the dominant force in the market. I believe in my trading strategies completely and wholeheartedly. I always follow what the market is doing and not what I want market to do. Markets are always right. They're made up of very, very intelligent and very, very powerful people. If the market is going up, there is a reason. If market is going down, there is a reason. I don't need to know the reason. I just need to know that what market is doing. I practice proper risk management. I take small losses and let the profits run. Very important. Very, very, very important. Before taking every trade, I imagine it to be my most important trade towards getting my freedom, getting my vision, getting my goal, whatever. I take only those trades that give me reward that clearly outweighs the risk. Either risk reward is very, very good, or my hit ratio can be 95% or whatever. I find other things to do once my trades go live. This is a very big mistake that most of the novice traders do. Once they enter the trade, they keep on analyzing, they keep on looking at charts as if just by looking at the charts, charts are going to move. And then what happens is their vision of their understanding of reality keeps on changing all the time. So their BP will continuously keep going here and there, their heartbeats will go up, and they'll end up making mistakes. I am not emotionally affected by profits and losses. I remain dispassionate always. This is extremely difficult to do, but extremely important. Believe me or not, trading is about money, and money directly impacts my life. Whether I am going to be having food at the night, or whether I'm going to be having great vacation at the end of the month, clearly depends on the decisions that I'm taking. So it's very difficult to disassociate you with the profits and losses or the money, but then that's the most important thing to do if you really want to be successful. I count my profit only after exiting my trades. This helps you do the previous one. I will not interfere with my trades without good cause. I would rather not interfere at all. I am happy to take profits, and I am not greedy. A lot of times what happens is I want more, and then everything is gone. I respect money, and I never engage in gambling my money in the markets. Very important. On the previous one, don't take profits too early. I'm not saying that. Have your trading plan and follow the trading plan. I am not influenced by news and fundamentals in my trading decisions. Yes, I made market analysis in the night. At the time I want to have my theory of the direction of the market or blah blah blah, everything. I will read, listen to fundamentals, news, everything in the night. But then when I am at the trading station, when I am doing actual trading, I am not going to look at anything. Only thing that I am going to look at is what market is doing. I am happy and successful trader. Wow. I never average on losing trade without good reason. I never average the losing trade. I don't want to average them. Lot of times what happens is we have fallacy of being right, and for that we end up averaging and re-averaging and re-averaging before knowing when we blew up all our capital. I always trade in high conviction and low risk trades. Very important. My stop loss is worked out before entering a trade, and I strictly follow the same. Before is a keyword here. I always prioritize mind, money, technical analysis, price action, and then blah 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 blah. You have your own list. I do pyramiding on winners when continuation trades comes my way. Very important. I know very successful traders who are successful only because of this pyramiding. I always keep what if scenario. What if my trade goes against me? For example, I'll talk about Bollinger Band. When Bollinger Band is challenged, it is usually seen you will get very good risk to reward, 1 is to 5, 1 is to 10 sometimes. But then the hit ratio of that particular trade is about 36%. I've done a lot of backtesting, by the way. So now I have taken a trade based on my entry criteria, Bollinger Band challenge, and blah blah blah, multiple things. I am in my trade, but then the trade has gone against me. What do I do? I definitely want to exit at my stop loss, but can I reverse it? Because now I know that 63% probability is with me that it will go on the other side of the Bollinger Band. Why leave money on the table? I'll pick it up. This is a sample trade plan. This is an old trade plan that I'm showing. I no more follow this. So please evaluate it before, if you want to follow. The most important thing that I wanted to talk about is the column headers. My trading plan need to have at least these many. You can have more than that. When am I taking going to take this trade? The specific rules for last week of expiry. I can take it anytime or whatever. What is my scanning criteria? So how am I looking at the stocks that I really want to do? And for example, let me read out the second one. It's a stochastic long. So what I'm saying is average of volume for last 14 days multiplied by average price is greater than something, so I need to only get into liquid stocks. Next one is stochastic of weekly is less than or equal to 25. Very simple. And stochastic for weekly 5 years, 5 week back to 15 back is greater than 50. So earlier, for last 5 weeks or 15 weeks back, all the stochastic has been more than 50, and now this suddenly has given a drop, and it is now less than or equal to 25. Okay. The next analysis is observe daily stochastic. This was on weekly. Now look at this daily stochastic. Has it crossed over? Now that is my entry condition. Is it a stock which is going to be giving very good improvement? Hmm? That is the further detailed analysis. Now where am I going to be looking at it? So this is only for equity for delivery, or it is for option selling if the delta is less than 30, a particular option buying if for the delta is greater than 70, and minimum 2 3 weeks in series to go for the next series. So I don't want my time value to erode me. Okay. So above, option selling and buying could be done together. So what am I doing it? Next one is, what is my timeline? So I'm looking at weeklies, I'm looking at dailies, and I'm looking at 75 minutes for entries. What is going to be my exit criteria? No or very little move in 2 weeks. So I enter in, but it has not moved in next 2 weeks, I go out. My stop loss is hit. Since I also have rules of the stop losses, so you could say, but 30% is my stop loss on my equity trades, or for you it might be 10%, or you could also have stop loss based on stochastic levels, doesn't matter. Since these are mostly high rising trades, they will be exited rarely on the reversal chart pattern. So you would wait for the reversal chart pattern to go in, and then there is reversal chart pattern immediately next. And then why am I taking this trade? It's a medium to long term equity bet. Then what are the different important points that I need to be looking at? These points may come in by my experience. For example, Bollinger Band, I said if the challenge is failed, that is going to go to the other side of the Bollinger Band. So these kind of things you need to be having in your trading plan. A lot of times, lot of people will tell you have trading plan, have rules, but very few people will actually give you with an example with the details that you need to be putting in into the trading plan. Please do this. Without this, you don't trade. Stop your trading right now. Put your trading plan. Make sure your rules are there. Only then get in. Next one. After the trading plan, I'm going to be keeping the journal. I'm going to keeping the books. But in books, I'm not going to be keeping the amount of profits. If you want, you can. But I've seen that it only distracts. It only makes you think about losses and profits to be your success criteria. So what am I going to be entering? The first one that I'm going to be entering is the setup that I have used, exact values of indicators, probability as per my back testing. Bollinger Band, it's only 36%, so I need to know that there is a chance that I will go wrong, and I need to have plan what to do if it is going against me. What is my plan for pyramiding? If it goes, am I going to be looking at weeklies, and then I'm going to be adding little more on weekly Bollinger Band challenge, for example? What is my emotional state at the time of entry, during the trade, at the exit time? This is very important. I'm going to be coming back to this in a couple of slides. Then the most important thing, how do I evaluate my trades? I do not want to evaluate my trades by the money that I am making, by the percentage of trades going right, nothing. I am going to be evaluating my trades by these criteria. Did I exit it too soon? Did I exit it too late? Whole rally was over. Did I enter too soon? Did I enter too late? Did I take a trade which was not there in my trading plan? Did I put incorrect stop placement? Was the size of the trade wrong? Did I trade? Did I miss out a trade which was there in my plan or my strategy plan? So these are the criteria that I am going to be using. After following everything right, I still may make losses. Does not matter. In a long run, you will make profits, and you will make tons of profits if you use these as your evaluation criteria. Very important. Don't forget it. What happens most often is we start looking at money, and the moment we start looking at money, whether I am losing or winning, then it sits on our mind and it works negatively. Our emotions at the time of taking decisions are the ones who are deciding our decisions. Okay. So once I have my trading journal, I want to look at which quadrant These are four quadrants that we talked about in last session. Which quadrant I am fitting in when I am taking best entries? For example, when I am most alert, when I am little excited, I am taking the right entries. Which quadrant I am when I am taking the right exits. Let's say I am very calm and relaxed at that time, I am taking the right exits. Now I want to look at the emotion at the time of this particular trade, next trade that I am going doing, and if I am not alert enough, what can make me alert? A quick game of chess may make me alert. Playing some sukudu may get me alert, or playing music may get me excited. Whatever, do those small things, get that frame of mind, and then enter in. Okay, something that can calm me down. Slow music can calm me down. What what are the different things that I could do to get into a particular quadrant? For some people, I've observed very rare cases that at times when they are tense, they take the right trades. So for you, it might be different quadrant. You need to know your quadrant based on your journal, and you need to be making sure that again and again, you're taking yourself into that quadrant before taking the decisions. Don't worry about reality. Let markets tell you, and they're always right. Keep it ultra simple. I know some very super successful people who are trading only charts, no indicators whatsoever. If you have time, please read over turtle trading. They did not use any indicators, but still they were very, very successful. Finally, it's all about probability. And if you take a trade, it might go your way or it might go against you. So it's only 50% probability. Let the money management do the job. Make sure your risk to reward is always 1 is to 3. And that is what will make you a winner in a long, long, long way. All said and done, this is just the beginning. Although this will give you 70, 80, 90% improvement, every mind is different. If you want more than that, you need to look at customized solution. You need to keep analyzing your mind, analyzing your journal, which is entry to your mind, and then continuously try to improve. Not Don't look at the output, improve the inputs. Once your inputs are improved, your output will automatically come. If you liked it, please like it. If you like it, please share it. Subscribe to my channel. Thanks a lot, and very, very happy trading. Have a great day. Cheers.